Hey, everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, it was a huge day for crypto, lots of major news items, so make sure you watch and listen to the end. First up, crypto custodian BitGo went public on the New York Stock Exchange. This is another crypto company in a long line of companies that have gone public. Many went public in 2025, the biggest being Circle. And this year, we've heard about Kraken, Securitize, of course, BitGo, and there's many others. So it's exciting. These companies are not going public now because it's a bear market, like others are saying. We're still in a bull market. There's still liquidity out there. So that's why you're seeing these folks are lining up and having their turn, at these stock exchanges. So very, very exciting. Many of you know I've interviewed Mike Belshi, the founder and CEO, on the podcast many times. I've had BitGo as a sponsor as well. So they're doing some pretty great things. So BitGo's Class A shares began trading on the New York Stock Exchange under the ticker BTGO following its $18 per share initial public offering, which raised about $212.8 million and valued the company at more than $2 billion. Incredible. Crypto companies going public, guys. I couldn't imagine this when I got into the crypto market in 2016, 2017. It's a very different environment, but the asset class has matured. The industry has matured. We're going mainstream. TradFi is coming in, trying to build with the technology. And these native crypto companies are now maturing themselves and going public. It's incredible. So I expect we're going to see more companies go public this quarter. And speaking of institutional adoption, PwC, which is one of the top 4 accounting firms, they said today that institutional crypto adoption has passed the point of reversibility. So I think we all see the writing on the wall, those of us who have been following it for a long time. But to have these type of institutions put out information about it, and they're trusted institutions, they have a big brand, they've been around for a long time before crypto. If they're coming out and saying it, it's further validation. So in its Global Crypto Regulation Report 2026, the consulting firm argues that rather than being driven primarily by trading activity or speculative demand, digital assets are increasingly becoming embedded in payments, settlement, treasury options, and balance sheet management. Here's a quote. Institutional involvement has crossed the point of reversibility, the report says, citing growing use of stablecoins, tokenized cash, and on-chain settlement tools across banks, asset managers, and payment firms. So I hope you see the direction the puck is heading in here. It is an inevitable. Like all these TradFi companies, banks, stock exchanges, and much more are getting all in. And I think many folks recognize this. Even Ripple CEO Brad Garlinghouse speaking at Davos, he says he expects the crypto market to hit a new all-time high, and institutional adoption is not priced in by the market as much as he expected. So we are going to see all of these things culminate to higher prices and valuations, guys. And we are seeing a lot of capital still being raised. So here's an example. Superstate raises $82.5 million Series B funding to expand on-chain equity issuance infrastructure. So capital being seeded into these different companies that are tokenizing, building the infrastructure to bring TradFi assets on chain. So a lot of big names participated in this round, including Bain Capital Crypto, Distributed Global, Han Ventures, Brevin, Howard Digital as well, Galaxy Digital, big names there, guys. So they're looking to bring real world assets and capital formation on public blockchains. So think of IPO, we were just talking about BitGo going public. They're going to bring that on chain. We already know how amazing tokens can be in capital formation, and it has a global reach versus just specific markets. So, even look, I'm not a big fan of meme coins, but meme coins are a clear example, right? So this model is going to be used by these financial institutions to raise capital. And folks, they're going to be building, let me give you the details here. Superstate plans to use the new capital to accelerate its expansion beyond tokenized treasury offerings and into a broader issuance layer for US SEC registered equities on Ethereum and Solana. So again, that's where you can take your bets by holding the tokens of ETH and Solana. And look at this. Binance founder CZ says he's in talks with dozens of governments about tokenizing their assets. So it's not just companies, it's governments as well, right? We know they're already putting the fiat currency on chain, stablecoins, CBDCs. they're going to put other assets, gold, real estate, and much more. And here's a great example of institutional adoption. $18 billion asset manager F/M, I believe that's how you say their name. It's literally F/M, seeks SEC approval to tokenize US Treasury ETF. So all these TradFi institutions, they're now ramping up their efforts and looking to, get started and build their products. So the $18 billion asset manager filed Wednesday for an exemptive relief to let F/M US Treasury 3-month bill ETF record ownership of its roughly $6 billion in shares on a permission blockchain while remaining a standard 1940 Act exchange traded fund. In its press release, F/M describes the filing as the first of its kind from an ETF issuer seeking U.S. regulatory relief, specifically for tokenized shares of a registered investment company. See what's being built, folks? This is just incredible stuff. And the regulators, the SEC and CFTC, are on board. They're trying to get everything through. We know the market structure bill has to get passed, and we're going to see even more activity. Here, SEC Chair Paul Atkins tweeted out today, "I'm looking forward to joining CFTC Chairman Mike Seelig next week for our SEC and CFTC joint event to discuss harmonization between our two agencies. Together, we discuss our efforts to deliver on President Trump's promise to make the U.S. the crypto capital of the world." So everybody's on board here, guys. So I think there's still major milestones ahead, and I'm excited to see how it all rolls out. Now, folks, this episode is brought to you by VeChain, which is one of the top layer 1 enterprise blockchains out there. It's getting a lot of adoption from companies and brands around the world who are building incredible Web3 technology. They're partnering with Dana White and the UFC. Last year, Dana White said he bought $1 million in VET token, and some of the key features or benefits of the VeChain blockchain includes it's scalable, secure, fast, compliant, and purpose-led. And folks, I am a VET token holder. I have been since 2018, so I'm bullish on this project, and they're building some really amazing things, very creative. For example, they have reward systems that are in the form of tokens that you get rewarded for recycling and doing certain things that benefit the environment and much more. So you can also stake the VET token via Stargate, and lots happening in the VeChain ecosystem. So if you'd like to learn more, please visit vchain.org. Link will be in the description. Okay, moving ahead, Nasdaq moves to remove position limits on Bitcoin Ethereum ETF options. So again, stock exchanges, banks, fintech firms all getting involved. So US exchange Nasdaq has filed a rule change with the SEC to remove limits on options tied to spot Bitcoin and Ether exchange traded funds in a move to align crypto ETF options with rules applied to other commodity-based funds. The proposal, filed on January 7th, made effective on Wednesday, lifts existing 25,000 contract limits on options linked to a range of Bitcoin and Ether ETFs listed on Nasdaq, including products from BlackRock, Fidelity, Bitwise, Grayscale, ARK 21 Shares, and Van Eck. The SEC waived its standard 30-day waiting period, allowing the rule change to take effect immediately while retaining the authority to suspend the change within 60 days if it determines further review is warranted. Guys, it's amazing what's happening. The Nasdaq is doing this, not a crypto exchange, right? So they want to go all in, but it's crawl, walk, run. Everybody's going to go through their processes, their risk management, and much more. But the end goal is all the same. We're all headed to the same destination, and that's this asset class growing into the trillions because you're going to put, remember, the other assets on chain. So that's going to count towards the market cap and much more. Look at this, literally billions of AI agents to use stablecoins in 5 years, says Jeremy Allaire, Circle CEO. This is something we've been talking about for a while. We know AI agents are coming, even robots. They're not going to transact in cash. There's going to be crypto wallets using stablecoins that these things are going to use, guys. I remember interviewing the CEO of OpenMind, which is building robots, and guess what? Those robots have a crypto wallet built in. And they're operating with smart contracts, guys. It's incredible. So within 3 to 5 years, billions of artificial intelligence agents that can work without human input will use crypto and stablecoins for everyday payments on behalf of users, says Jeremy Allaire, CEO of stablecoin issuer Circle. Here's a quote. 3 years, 5 years from now, one can reasonably expect that there will be billions, literally billions of AI agents conducting economic activity in the world on a continuous basis. He said this at Davos, at the World Economic Forum. So incredible stuff here. Now, look at this. Coinbase forms a board to assess quantum computing risks to blockchain. This is smart. I think the industry needs to do this. We need to look at all threats. But I'm going to say this: if quantum computers are actually, going to be a threat, and we're at that point, you got more stuff to worry about, like your car getting shut off, the electricity getting shut, your everything, right? There's more problems in our day-to-day lives than blockchains. Now, obviously, blockchains are going to power a lot of things in the markets and economy, so you do need to make sure you do this risk assessment. And I do believe that these crypto companies are going to upgrade their blockchains and the networks and so forth to be quantum ready and resistant and much more. So I don't think they're going to be caught flat-footed. Oh my God, a quantum computer just popped up and attacked us. Like, we know these things are going to be monitored over time. They're going to use AI to help combat these things. So I don't think this is anything to worry about. But certainly, you got to come together, put your brains together, and figure out what are the threats, and make sure you're planning and ready and prepared for these things. Okay, Bitwise launches actively managed ETF pairing Bitcoin with gold. Smart move by Bitwise, because gold is running like crazy. And if you want these two assets, which are very similar, of course, Bitcoin is digital gold, but the actual real gold is performing really well. So I think this is smart, and we could see this type of mixture moving forward, where maybe real estate and other assets mixed with crypto. I think it might start with Bitcoin, and then it could go beyond that. Depending on if a token is targeted to a specific industry, known to be a blockchain used by a specific industry, an ETF could be created with that token, plus maybe the stocks of those companies or other assets. So this is a very, very smart move by the folks at Bitwise. And many of you know I've had Matt Hogan of Bitwise on the pod many times. Okay, moving ahead, Nomura's Laser Digital rolls out yield-bearing Bitcoin fund. So all types of new financial products being launched for crypto assets. And it usually starts with Bitcoin, and then they move to altcoins. So the digital asset arm of Nomura is launching a new yield-focused Bitcoin investment product as asset managers look to offer institutional investors returns beyond simple price exposure. Laser Digital is launching the Bitcoin Diversified Yield Fund to address a growing market demand for tokenized yield-driven funds over vanilla long-only funds, according to a Thursday announcement shared with Cointelegraph. Unlike traditional long-only Bitcoin funds, the new product seeks to produce income by deploying diversified strategies intended to generate yield while maintaining exposure to Bitcoin, according to Laser Digital. So once again, all types of financial products being built, always make sure you read the fine print and make sure things look good before you just invest in them, right? Just because they're saying, here's the yield. I hope many of you who've been here long enough know we got to be careful, right? You remember what happened with Celsius? I'm not saying that's what Nomura is doing. We're in a different place in the market, but you always got to read the fine print. Where's this yield coming from? Who are they lending it out to? And much more. All right, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Like I said, a lot of big news items today. Pretty incredible. And BitGo going public and much more. That's pretty significant. Folks, be sure to support the podcast by subscribing to my free email newsletter. Grab a copy of my book on Amazon. And if you want to expand your knowledge about crypto, check out my course at mycryptocourse.com. Folks, today I was at the Stablecoin Summit hosted by PayPal and Borderless XYZ. So I did a lot of interviews there. I'll be publishing a lot of those interviews over the next couple weeks. And tomorrow I'll be at the New York Stock Exchange for the Halburn Access 2026 Summit. I'll be interviewing a lot of folks there too. So stay tuned, and I got a lot of content coming your way, guys. So thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.